Hey everybody, it's Thursday night. It's the Financial Thing weekly live stream. Happy to be here with everybody. Just let me know if you can hear the audio fine. Just put a note in the chat. Tonight we have a very special live stream. Been trying to get this guy onto the stream now for, I don't know, 23 years or so, maybe two. I don't remember. And finally, Louis has been able to carve out some time in his hectic, busy schedule. Louis from Loanpad, almost said live stream. Louis, the live streamer from Loanpad, is here to have a chat with us and do a Q&A. If you have questions, please put them in the chat. We will get to them at the end. And don't forget, if you haven't already got a Loanpad account, you can go to financialthing.com. You'll see banners on the website. You can go to the cashback page, get yourself some cashback for trying out Loanpad, one of my favorite peer-to-peer lending companies in the space. Been doing some really good things, and we're gonna have a live chat. Don't forget, hit the subscribe button and hit the thumbs up. And we're going to bring Louis on. We're doing it a little bit technically different this week, doing it through Google Meetup. So hopefully, fingers crossed, everything works out. Let me go ahead and bring on Mr. Louis Schwartz. Hold on. Here we go. Oh, no, Louis has left the meeting. Hang on. He needs to come back. Oh, for some reason, we just lost Louis, but no, there he is. There he is. Let me make sure.
Hi, Lauren. Good evening.
Hi, Louis. How are you?
Yeah, really well, thanks. How are you?
I am doing excellent. Glad to be here. Just everybody in the chat, let me know if you can hear Louis okay, because again, we're doing things a little bit differently this week. But yeah, Louis, thanks for taking the time to come here. We have a lot of Loanpad users on the Financial Thing channel. Everybody is super excited to hear from you and hear what's going on with Loanpad and get your views on the peer-to-peer lending industry. And I know you and I have had some really good chats over the years that we've known each other about what's going on in the business, and I always enjoy your insights, so thank you for being here.
It's a pleasure. Thank you for having me on.
Yeah, absolutely. Okay, so just for anybody that doesn't know you, maybe give them a brief background about yourself, your past experience with the property side, where you came from in business, and how you began to start. Why did you start Loanpad?
Yeah, sure. So just a bit of background. So I am a lawyer by background. I qualified as a lawyer, I think, in 2005. And I was working in law and also in property for a few years thereafter. In 2009, I started a law firm with a couple of partners, and I was managing that until the end of 2016. From 2017 onwards, I was really mainly focused on Loanpad, the FCA commission, and the software build, and so on.
Mm-hmm.
And yeah, I got into lending really. I mean, most of my clients when I was managing this law firm were property finance businesses. So I had quite a number of years experience acting for them, all the way through from production of their documentation, their loan agreements, legal charges, etc., to acting on the loans themselves and doing the due diligence, to recovery proceedings, so court possession proceedings, and appointing receivers and so on. So I had quite a number of years experience doing that with a number of different lending businesses. In around 2014 or 2015, I started a finance business, which we were doing quite well, but it was very difficult to scale. We found it to be quite a saturated market where it was hard to differentiate ourselves from anyone else really. And brokers had their favored lenders that, they had a big track record with. So it was quite hard to scale. I then came across peer-to-peer and thought it would be a great idea to create a system pretty much as Loanpad is, working alongside lending partners rather than competing with them, and providing them with senior finance to help them fund their loans. So that all started, I mean, that idea came about in 2015. It took a number of years to get FCA permission. We applied at a very bad time in the sense that all P2P platforms that had been operating to that point had to now become authorized by the FCA. So all of those platforms were in the queue essentially ahead of us. So it took a very long time to get FCA permission. And obviously building all the software and testing it and so on was very exhaustive. Anyway, we finally came through all of that and managed to launch in 2019. And since then, it's been growing steadily. And COVID came along about a year after we launched, so that caused a small bump, but we managed to see through that quite well. And then since COVID, since the first couple of months of COVID, it's been steadily growing month on month to where we are today.
And one of the things that, there's a couple of things about Loanpad that I think really stand out to me. One of them is that you pay daily interest, which is, I don't think there's any other peer-to-peer lending companies that do that, which is great. You have really great liquidity that's always been, even through the COVID times, as always, as your website states, less than a day. So if for some reason somebody needed to pull some cash out, they could do that, providing there is that liquidity, which has been there so far. But the other thing that I loved about what Loanpad was doing was the relationships that you had with the lending partners, and specifically the one that you started at, who I went to visit, which was Hanf. And since then, you've kind of expanded into other lenders. Now, you have had a very long-standing relationship with Hanf, which was your main based lender. I mean, it was I think 12 years of working with them before launching Loanpad, correct? Can you tell me about that relationship?
Yeah, sure. So so Ken Court, from the owner of Hanf Finance, he was a client of the firm where I was training, and then that firm closed. I moved on. He contacted me and really got me involved in that whole world of short-term property finance. So he was my first client in that area. After acting for him for a few years, slowly got a few other such clients. But yeah, I've known Ken since probably 2004. Started acting for him from 2007, I would say. And yeah, he's been a long-standing client, obviously on the legal side, and then obviously I discussed with him the idea of Loanpad at the outset. He was very keen on the idea, thought it would be a good concept, and something that, although Hanf at the point didn't necessarily need any finance from anywhere, he could understand how many of their competitors would certainly benefit from such a product, and also in the longer term it would potentially help Hanf scale. So yeah, he's very supportive, and he's been very supportive all the way throughout. So certainly Hanf helped get us off the ground, and yeah, very, very grateful to Hanf for doing that.
Yeah, what I liked was when you took me over to meet Hanf and the guys over there, their experience is they just have so much experience in the property development side, which I was really impressed by. But what I was most impressed, that you were able to work a deal to be first in line over even Hanf, who was doing the development side and doing the lending side. How did you manage to pull that one off, so you were putting the interests of the peer-to-peer lenders before anybody else?
Well, really, it comes down to the fact that we charge a much lower rate, obviously, on our senior portion than the borrower's paying on the overall loan. Actually, the structure started a bit differently, in the sense that the initial structure was going to be lending the money to the lending partner, i.e. Hanf, and then securing that loan by way of charging their loan to the borrower. And that was how we'd initially set things up. But the FCA about 6 or 9 months after we'd submitted our application, changed the rules really and said that wholesale lending was being banned. And that they felt that completely cut across our entire model. So we had to restructure it, which we did. So now instead of us lending the money to the lending partner is really selling a senior slice of their debt to us. So it's a direct borrower and investor relationship without Hanf interposing in the middle. So yeah, the FCA were not too happy with that setup. I don't think it was anything to do with our specific structure, but I think other peer-to-peer lending companies had got into a bit of difficulty, not doing what we were doing, but doing what the FCA classified as wholesale lending, which they deemed our structure to fall under. And they just basically given a blanket ban on wholesale lending. So that basically meant we had to change our structure quite heavily. Although it's to the same end, and really the structure, although it's different legally, it's very close to being the same thing.
Yeah, absolutely. You started in 2019, as you said. We launched. I'd actually met you before you even launched Loanpad. Is when I first, I think, was approached by you. What I was impressed with, and I think this is a difficult thing to do, is you've built up this really good base of trust in a time where some companies were running into trouble. The peer-to-peer lending industry was kind of getting into a bit of a gray area, and we've seen these company failures, which again, you and I talked about a couple of years ago. You said, hey, it's a possibility that any peer-to-peer lending company could run into difficulties. Now, how have you been able to build up that trust within the community in such a short period of time? Because I think the last time I checked, you had over 3,200 lenders within Loanpad, which you've done pretty quickly. How have you been able to build up that trust? That's one of the hardest things to do.
I would say just by doing what we say we're going to do, and being transparent about what we do, and being consistent, really. So I think it's fair to say all investors have got exactly what we've advertised over the last 2.5 years. And yeah, really, it's the consistency and the transparency I imagine that investors find comfort with.
And as far as liquidity goes, how have you been able to maintain this level of liquidity through COVID? During the COVID times, were you getting a lot of lenders that were sort of getting the cold feet and wanting to exit out? Or did you find most people were staying invested? And how do you manage that balance between making sure there's enough money on the platform to fund and for people requesting to exit if they need to?
Yeah, so when COVID first hit, I think the whole world was in a bit of a daze and understandably panicking. So we did have immediately when COVID first hit and the lockdown and so on, there were a lot of investors that were looking to withdraw funds. We managed to meet all withdrawal requests, thankfully, on time, 100% of the time. Most of the money on the platform is on 60-day notice. So a lot of those withdrawals were 60 days ahead. That obviously gives us a lot of time to plan, receive new incoming investors, natural loan repayments, etc. So all of that was quite natural. We also have, the extra option where there's no obligation on a lending partner, but we do have the option of selling loans back to lending partners who often have more liquidity than they particularly wish to have as well. So if there was a sudden increase in withdrawal requests, then and natural loan repayments weren't sufficient to cover that, I'd be quite confident that some of our lending partners would be able to step up and repay some loans a bit early, or buy back the loans, I should say. Although we've never had to do that, it's an option that's open to us and our lending partners. Mm-hmm. But obviously, we keep quite a bit of cash within the portfolio, so we don't expect to have to go to those lengths. We can see the queue 60 days in advance, so we have plenty of time to prepare for upcoming withdrawals. Obviously, the classic account doesn't have the 60-day notice, but it's a much smaller limit of 20,000 maximum per investor. So that doesn't really, account for a large sum of the overall funds under management.
One thing about Loanpad is you've got a very small interest coverage fund. So some other peer-to-peer companies have very big provision funds, they call it. You have a kind of a smaller fund.
Seems to have, I can't hear what you're saying. It seems that the sound has gone, unfortunately.
Oh, can you hear me? No? Not hearing me? Hold on.
Should I log off and log back in?
Yeah. We'll be right back with you. Again, we're using Google Meet. Is that better?
Yeah.
Okay, perfect. I wanted to talk about defaults, obviously, kind of the black sheep in peer-to-peer. Some companies doing some really tumultuous lending practices, maybe lending on some loans that are not good. One thing is Loanpad has a very small interest coverage fund for its size of its loan book with £40,000. You've managed to keep the default levels very small. Every time I check, there's always one single loan that is inside that interest coverage fund. So two-part questions. Number one, can you tell me what's going on with that loan? And then second part is how have you managed to keep the defaults so low throughout the operation term of Loanpad?
Yeah, sure. So the loan that's in default was actually one of our very first loans, and the borrower, due to personal circumstances, was unable to proceed with development shortly after starting. So Hanf appointed a receiver to take over the development and complete it, which has now been done. There's four units within the development. They're all completed. 3 of them are currently under offer, or have sales been agreed on 3 of them. So we're really just waiting for the first of those 3 sales to complete, and our loan would be fully repaid. Our loan is 150,000 plus interest, and the security is probably likely to yield 800,000 plus. So it's a very low loan to value for us. We've always been extremely comfortable with the situation. Unfortunately, sometimes these things are going to happen, and delays, are inevitable in this sector, really. Short-term property finance, anything can set timetables off track, especially in post-COVID. With that one, obviously, it was quite a specific issue in terms of the borrower having personal difficulties. But yeah, I think Hanf have really resolved the matter perfectly in everyone's interest, including the borrower.
Mm-hmm. Yes, it's one thing to know too if you're talking about defaulted loans. Again, this loan on Loanpad was a very small loan. It was 150 grand, which in the grand scheme of 2 years of lending, to have one loan of 150,000 pounds go into default is a very good result, I would say. And it sounds like the loan to value is so low, it's going to be taken care of. What about as far as the other loans? You've got over 100, I think, now on the platforms, but you've again managed to keep these defaults to a bare minimum. Is that just due to the risk nature of the loans being very low from the lender itself, or have you just gotten lucky with the choice of loans, or is it expertise of the choice of lender?
Well, it depends what you mean by default. The FCA classified default as any loan that's 180 days beyond its repayment date. But obviously that doesn't necessarily mean the loan's in trouble. So, we have had a lot of extensions. So a lot of our loans do go beyond the term, probably average for this type of lending. But because we and typically our lending partners as well are very conservatively lending against the value, it's not really caused any problems. I mean, certainly from Loanpad's perspective, it's very easy for us to take a back seat because we're in a very comfortable, safe, low risk position. Obviously, we monitor to make sure that things are progressing towards the intended exit, depending on what the loan is. But yeah, we're not too keen on rushing in and putting too much pressure on the borrower unless the situation calls for it. In almost all of these situations, the borrower is totally upfront with us, and therefore we have no reason to, impose any stepping rights or anything like that. But obviously, if the situation calls for it, then that is something that we would have to do. But I suppose it's just a mixture of good quality due diligence on the way into a loan, really, between us and our lending partners.
Yeah, and absolutely. And if you're watching and you have questions, again, we'll do a Q&A at the end. Just pop them in the chat and hang out to the end of the stream. Watch it all. We'll get to your questions. Let's talk about the borrowers that you're taking on board now. Originally, you started with the single borrower being Hanf, and you've since expanded. And you'd always told me that in the future you'd plan to do that. And I think maybe you're up to 6 now. Is that correct?
Yes, right? We're up to 6 at the moment. We've actually got a 7th one that we've onboarded. So the first couple of loans with them are expected next week. So that'll be number 7. We've got a couple of others in the pipeline. But really, we don't want to spread ourselves too thinly. In terms of the number of lending partners we can take on, is really dependent on the level of funds that we have on the platform.
And what is that balance like at the moment? Are you finding that you have an excess of funds coming in from investors, and there has been that need to find new lending partners? How is that balance at the moment? Is there a situation where you would have a lot of money sitting on the platform and not enough loans to put that money into, or have you found a good balance so far?
Yeah, temporarily that is sometimes the case. At the moment, we probably have 10% of the portfolio in cash, which is higher than we would usually have. But we expect all of that to be put into loans, or the majority of that to be put into loans over the next week or two. We have a very large pipeline. I think right now it's always tough to balance, as you say, supply and demand in terms of the investment and the lending side. Right now, I'd say we're stronger on the lending side in terms of we have a very large pipeline which we won't be able to fulfill in total based on the level of funds we currently have. So we do have quite a bit of room for growth on the investor side to increase the loan volume.
So there you go. If you have money that you're sitting in your bank account getting 0.4% interest, you can get yourself quite a bit more than that on Loanpad. Don't let your cash get eaten by inflation, people. If you're sitting on a lot of cash and savings right now, bad place to be. It's going to get worse. Your money's getting deflated every year, so put it to work. Loanpad is one of those places you can consider. Let's talk about since COVID. So you started in 2019. Did you see the developers running into more difficulties, like financial difficulties on the loans that you had, that maybe were coming into the platform right before COVID? Were most of them able to weather the storm okay, or what's it been like for them?
You talking about after COVID hit, do you mean?
Yeah, the developers that you had these loan partnerships with, did everything kind of get a little bit murky with as far as the borrowers not being able to pay back? Were they on paused situations where they had some kind of relief, or what happened to them?
Yeah, I mean, most of our development stuff really of any scale is with Hanf, who have 40 years experience. There were certainly some worries amongst some developers, once the lockdown happened, because there was a complete bar on doing any development work for a short period. But as soon as it was possible, most developers were we're back on site with probably less staff at the start, with additional social distancing measures and so on. But I would say on the whole, it was handled by all of our borrowers very, very well. It inevitably caused some delays. Many of our loans do get extended 3 months or 6 months or possibly longer. I would say we're very pleased with how our borrowers handled all of those developments.
Yeah, and for anybody that's watching who doesn't know, we're talking about Hanf. They have a pretty big, they're a family investment company, so they have a pretty big cash cushion of themselves that they use to do financing of development. So Louis and Hanf have been working together for a long time. We talk about Hanf a lot, and some people may not know exactly who we're talking about, but they're one of, I would say, your main source of business at the moment. Does that continue to be that way?
I mean, they were certainly our sole source, for a good probably till some point post-COVID. Currently, I would say they're still our biggest lending partner. I wouldn't say that. I mean, they're probably about 25% of new loans go through Hanf, I would say, currently.
Okay. Let's talk about Loanpad as a business. You always told me right at the beginning that you ran a very lean business because you're not sourcing loans yourself. You have this relationship with this lender, Hanf, and we talked about how important it is for companies to be able to operate in profit and not be losing money every year. How is Loanpad situated right now as a business with regards to profitability? Are you there yet, or where are you when it comes to that?
Yeah, so thankfully we've been profitable since June, I think, of this year. So obviously that's a big weight off all of our shoulders, because it means the business is no longer burning cash, and the need to raise additional capital is no longer a problem for us. We did raise some money earlier this year on Seeders to give investors a chance to join the equity. So yeah, I mean, the last 3 months we've been profitable. That's growing each month. We do have quite a small team on the basis that all of our loans, we also have all of our lending partners managing those loans as well. So there's less need for us to have a high number of staff, or there's less need for us to have a number of staff as we would if we were originating the loans ourselves and managing them fully. Certainly that's the biggest key for us is we don't need as many staff on that side of things as we otherwise would. So that helps us obviously keep our costs down, keep our margins slim, and keep us attractive for investors on one side and lending partners on the other.
So you gave up lawyering to really, essentially, you made a really big career jump from lawyering to doing this. Any regrets? Do you miss that side of what you used to
do? No regrets, no regrets. I mean, law was good for what it was. But yeah, I mean, it wasn't really something I saw myself doing for too long. I was more keen on this type of business than I was on a law firm, really. But the law firm gave me great experience in several ways, so certainly beneficial.
Mm-hmm.
But it was never something that I imagined I would be doing for too long.
Yeah, and I think the transition you made from working on these real estate deals on the law side and then coming into the investment side was really smart, because you have a good understanding of how the loans are structured, how the developments are structured. So absolutely helpful.
It was a natural move, really.
Yeah. Okay, so we got to talk about these peer-to-peer company failures. You had told me a while ago that it was a possibility this could happen, and we saw the failures of Collateral, Lendy, Funding Secure, Wellesley, the House Crowd, Thin Cats, and they keep coming. So what are your views on, firstly, how does an investor now protect themselves on, these investments? Because if you're invested in 5 companies and 4 of them fail, obviously you're heavily in the red. And how do investors navigate this field now of peer-to-peer lending?
Yeah, well, I mean, with difficulty, to be honest. Obviously, the landscape has changed quite a lot over the last couple of years. I think most of the problems mostly arose with companies that were authorized or were operating pre-full FCA authorization. Most of the companies you mentioned there. Although the FCA, and I'm sure investors will agree, the FCA, aren't necessarily a perfect rubber stamp that a company is going to be doing what it says. I think it certainly has it's created a load of rules and regulations that all platforms are duty bound to follow. So I think there's less chance of seeing big disasters moving forward than we have seen previously with some of the companies you mentioned. If you take a company like RateSetter, for example, that closed down, that to me, I don't know too much about it, but that to me seemed like a relatively orderly wind down. I don't believe investors lost any money. They may not have got paid all of their interest, but in a worst case scenario, that's probably quite a good outcome when compared to the other failures that you've mentioned, which really, I think most of the other ones are from pre-FCA times that essentially they got authorized ultimately, but there was already not necessarily the best business setup to protect investors with the right protocols and procedures. So it's a lot of bad loans, no doubt. And yeah, I mean, I don't know exactly what's gone on in each of those companies, but some of the stories you hear obviously aren't very good.
Yeah, the RateSetter situation was absolutely a great outcome. They were taken over and everybody got paid back. And the other ones are going to be very much a different story. There's some questions of fraud behavior in some of the companies, and it's a very sad situation because, especially for us early adopters who, we were the cowboys who went in early, put a lot of faith into these company directors, and it's kind of a shame. But what it's done, though, and I think COVID has really washed out the bad players in the market and then left the good businesses to hopefully survive and grow, and then put a good name back on peer-to-peer lending where people can hopefully trust the people running the companies and make some interest on their cash that's sitting around. So
yeah, I think it's probably like that with any sector. It's sector starts, you get 2 or 3 or 4 big players that build a new type of business, such as peer-to-peer, the likes of SOPA, Funding Circle, and RateSetter, really, in our case. And you get a lot of other companies coming in off the back of that success. And then, you get a situation where a lot of companies aren't necessarily doing things in the right way. Other companies come along and learn from those mistakes, and really re-engineer the sector so that it's more stable and better run, really. So hopefully we fit into that part of it. Yeah, I mean, it's been quite a tough few years for P2P investors, no doubt.
yeah, hopefully better things to follow. Talk to me about interest rates. Loanpad is one of the lower
I've
sides.
lost your sound again. I'm gonna have to log off and log back in.
Go ahead. Some reason, you see, this is why we use Skype, because Skype just works. But Louis had trouble with Skype, so okay, is that good?
Yeah.
We got to get your Skype working in the future, so you might have to create a new Skype account. But let's talk about interest rates. Loanpad is on the lower side of peer-to-peer lending. That's one of the things that I get asked about a lot. Well, Lendy was doing 12%, and some of these Able rates doing 15%. Loanpad's 3 or 4%. Why should I risk? Is it worth the risk of putting money into an investment at 3 or 4%? talk to me about that interest rate, how that plays into the decisions, where that comes from, that rate. How do you come up with these rates, and do you think that's going to change at all in the next year?
I can't say if it's going to change in the next year. There's no plans to change it over the next few months. Certainly not this year in 2021, which I know there's only 3 months left. Really, the rates are based on the blended rate on the overall portfolio. So we did have to reduce rates quite a bit over the last year or so with our lending partners. It really depends on rates in the market. So, the more we're charging, the more our lending partners have to charge. And with the market being quite professional now, it's there's a lot of strong players out there, and if you want to get top quality business, most of our lending partners' borrowers would like to stay with those lending partners because it's good to continue dealing with the same companies. However, the rates obviously have to be comparable to what is achievable elsewhere. So, you have quite a few big enterprises now where rates are very, very competitive. So it really depends. And so I can't predict what will happen in the market, but obviously Loanpad's rates and our lending partners' rates will follow in tandem. Hopefully there'll be an uptick in rates. We can pay investors higher rates on the platform. But at this point in time, it's a bit too early to predict when that might be.
So you think that things are just going to basically stay the same for now, and there might be a uptick or a downtick if deemed necessary for competitive reasons?
Well, yeah, I mean, post COVID, you've got all these government schemes where the government is guaranteeing 80% of losses on loans that fall under that scheme. So that's enabled lending businesses to really massively reduce the rates because the risk is obviously massively borne by the government. So that obviously feeds into the wider alternative finance market, where other funders have to essentially adjust their rates, otherwise they simply don't get the business.
Okay. Again, for anybody that's going to be maybe watching this video in the future who has no idea what Loanpad offers, give me a quick rundown of the product. And if somebody puts in money, what are they exactly investing in?
Yes, sure. So we have two accounts, a classic account and a premium account. Classic account is currently 3%. That's daily access and a limit of £20,000. Access obviously subject to liquidity, and the rate and the 3% rates also subject to all loans performing. Premium account, which is 4% with 60-day access and a limit of 250,000. And again, access still subject to liquidity. All investments into either of those accounts, funds are instantly spread across our entire portfolio, which is currently, I think, 107 or 108 loans. That's updated daily, so investors are always spread across the entire portfolio. The reason for this is to ensure investors have as much diversification as we can offer. So even if a loan did go bad, it would represent, a very small portion of an investor's portfolio. That's, I believe, one of the main advantages of investing with Loanpad, is that you're instantly diversified. There's no cash drag, so you're instantly invested and diversified. Whereas with many other platforms, the headline rates may be higher, but it's much harder to get invested and diversified. So, on self-select platforms, it will take quite a bit of time to get the amount of money you want to be invested across a set number of loans. And of course, that cash drag leads into the return. So with Loanpad, we feel that we do exactly what it says on the tin. You can invest today however much you want within those limits and earn those rates and leave it running. It's all fully transparent. So obviously you can see each and every loan you're invested in and how much having each loan, a full loan report explaining the details of each loan, and yeah, trying to keep it, super simple so that literally anyone can know how to use it.
Okay, great. Thank you for explaining that, Louis. Let's do a little bit of Q&A here, and we got a few questions I think are interesting that I'll put to you. A couple of compliments too, which is always a nice thing. Nobody's saying your company's awful. Steve Manton says, whenever I deposit new money in Loanpad, it's always been invested in one day, whereas on other platforms recently it takes an average of 4 to 5 days. That he really appreciates that. Norman P said, and this is a good question, like, how do you choose which loans you're actually going to accept, and do you turn down, what's your percentage of loans that you actually accept versus what you say no to?
Quite high, actually, higher than it would probably be for a normal lender, simply because by the time it comes to us, it's already been through our lending partners' due diligence. They've already agreed to do the loan, and obviously put in their own funds to that loan. So typically, by the time it comes to us, most of the wheat has been sorted from the chaff, so to speak. So quite a high acceptance rate on our side. There are loans we do turn down for one reason or another. In terms of how we choose, really it's a first come, first serve. So when a lending partner sends us a loan, once we agree that it's a loan that we would be happy to do, we add it to our pipeline. And if funds are available when the lending partner completes the loan, we'll put in our share at that point. Otherwise, they fund it separately and we buy our part as soon as we're able to. So it's quite a good setup for us because it means that we have the loans waiting as funds come in, and yeah, makes life quite easy for us.
Okay. Alan Stratford said, can Louis say anything about the new products that you teased us with in the recent autumn update?
Sorry, I missed that. I think.
Alan says, can you say anything about the new products that you teased us with in the recent autumn update?
Oh, I see. Probably not too much, simply because nothing's really set in stone. I mean, new products, new accounts. There are, a few possibilities on that. Firstly, I'd like to say that anything we do would not detract from the simplicity of the platform. That for us is absolutely key. That we don't want to turn it into a complicated platform. So any accounts we do offer will be similarly simple to use as the classic and premium accounts. Other than that, I can't really say too much, but there are various possibilities. For example, a higher LTV tranche, and also a leveraged product. But again, a leveraged product would require quite a few hoops to be jumped through with the FCA. That would operate similar to a premium account, but you would invest X and your money would be matched by cheaper leverage. So that would help investors boost their rates.
Okay. Paul Bagwas said, is there a possibility that the platform could become awash with money with no loans to fund? It sounds to me like you have way more loans than you have money to fund them.
At the moment, yes, that's true. I mean, it's a good question because obviously, we can't deploy unlimited sums of capital. If £100 million came into the platform overnight, we wouldn't be able to deploy that. So there would be a cap on the amount of money we would accept. And if we get to that cap, then essentially new money would just be queued, waiting for availability, i.e. New loans to be made or other investors coming out of the portfolio. So yeah, there's not an unlimited ability to deploy the capital, obviously. We haven't had to enforce a cap at any point to date. And it's not something we're expecting to have to do anytime soon, but it can't obviously be ruled out. And yeah, the worst case for investors would be that instead of investments happening immediately or within one day, it may take a few days or, in worst case scenario, potentially some weeks.
Mm-hmm. And then
we would obviously give plenty of notice of that.
And having the limits on how much any single investor could put in the platform sort of stops that You get some whale billionaire coming on board and saying, Louis, here's two billion that I need 4% on. That's not going to happen. Alan also says, can you explain the decision to hide lending partners from the lenders? Seems odd since the charges can be obtained on land registry.
Yes, so really it's based on the fact that firstly, we don't feel there's any negative, there's anything negative to lenders by not disclosing the lending partner on each loan, simply because the money's not actually lent to the lending partner, the money's lent to the borrower. The lending partner, other than putting their own skin in the game as well, is really managing the loan alongside us. So it's the borrower and the security that are obviously the key elements here. And the reason we removed or stop naming them in the loan reports is because it's potentially commercially sensitive information, which obviously can be gleaned from the land registry, but at the same time, we don't feel it's great business to be shouting about all your partners in every loan report. So we'll see how that goes. I mean, it's not something we're absolutely fixated on. If enough investors complain, then we may be forced to start naming them again. But we feel, it's the right balance. But it's obviously difficult because we've got to find the right balance between competing interests. So that's where we are currently. But we'll see how things go.
What about the vetting procedures for new lending partners that come on board? Are these new ones that you've had relationships in the past with, or how do you vet them, the new lending partners, aside of Hanf, obviously?
So a few of them, I would say 3 of them are prior relationships, including Hanf. The others are new relationships, and we do a lot of checking on the individuals behind the business, their track record, their background, their current loan portfolio, how they're managing their existing loans, how they're funding their loans, how they'll be funding the loans that they share with us, their documentation. So we have all of their documentation fully checked, so we're comfortable that it does what it needs to do. So yeah, there is quite a long onboarding process. I mean, it's not that long, but typically takes a few weeks from first meeting a new lending partner to being comfortable to onboard them. But we absolutely do very thorough checks. Yeah.
Okay. David Alderman says, any plans to reduce the £10 minimum reinvestment criteria?
Yes, absolutely. Yes, absolutely. So we're currently this software upgrade that we're currently working on, which we hope will be ready in the next few months. Once that's released, then that will go down to 1 penny.
There you go. I've been asking you for that for the last 2 years.
Yeah,
the day
it's been a long time coming, but it will. Yeah, and obviously that will help investors with their compound returns.
Okay,
certainly.
Let's see a couple of other comments. Norman says, really happy with the simple approach and reasonable rates. John Morgan, simple and reasonable rates, good history, can't see a downside. And John Day says, your average lender invests £12,000-ish. Would you expect this to rise or fall over the next year, bearing in mind the anticipated economic environment? You got to get the crystal ball out, Louis.
Yeah, well, yeah, to some degree that's true. I mean, just going on the last year's history, we'd expect it to slowly rise. I think after COVID, it was below 5,000 at one point, so it steadily crept up because overall our existing investors continue to increase their investments on average. Hence that slowly picks up.
Okay. So I have to ask you about crypto. Do you are you a fan? Do you like the Bitcoin game?
I'm a fan of anything that's has such huge returns for sure. I don't know too much about crypto, unfortunately, but yeah, I think it certainly um, is worthy of a lot of attention and a lot of investigation for people that are looking to invest in that. Um, I can't give you any insights because, as I say, I've not had the time to really look too much into cryptocurrency. I did nearly buy some Bitcoin a few years ago, but unfortunately, I didn't have so ruining those losses. But um, yeah, but yeah, I think it makes sense for um, it makes sense to have part of your portfolio in cryptocurrency. Certainly, whether it's 1% or 10% or whatever is I suppose the real question. But yeah, I don't think I'm the person to really answer that,
So you're not a
sadly.
crypto investor. I always ask everybody this because, I'm a big fan. I think I've talked to you ever since I've known you about this, and so I always ask everybody who comes on the stream, are you into
Yeah, I
crypto?
mean,
Do you own any?
I think it's still quite a drop in the ocean, isn't it? Because I was checking recently. I think Bitcoin and Ethereum combined um, are probably just over a trillion, maybe 1.5 trillion or something
Mm.
in total market cap. Which, if you think about it, they're the two main cryptos, and they're worth maybe between them half of Apple, let's say. So in the wider in the wider environment, there's obviously huge amount that it could continue to grow, um, but it's also small enough to be affected by potential government regulations or new coins coming out. For example, Facebook were looking at doing something, so
Yeah,
that
yeah.
could shake up the market.
We're still in its infancy. I'm a big believer in that. As everybody says, oh, it's too late, and I said, no, you're looking at it in the wrong way. There's possibilities of seeing 500,000 to $1 million Bitcoin valuations in the future, but we shall see what happens with that. Let's see if there's any other questions. We try to keep this under an hour. I fail miserably every week, but David Alderman says, how much do you anticipate you'll scale in the future compared to the 100 loans that you have on the platform now?
Um, I think I definitely need a crystal ball now. We'll just keep going. I mean, how big can we scale? I mean, I think we've just really at the tip of the iceberg. In terms of the lending side, we could add, quite a number of new lending partners. We currently have around 40 million under management. I think we'd be able to increase that to several hundred million without too much difficulty doing exactly what we're doing. Whether we can garner that level of investment on the other side is another question. I don't see why we shouldn't be able to. If you look at some of the main P2P players, such as Sofa Funding Circle, RateSetter, I think they're all touching 1 billion plus in retail funds. So, yeah, I feel there's plenty of room for us to continue growing.
Okay, one last question, and then I'll let you wrap up. John Day says loan extensions seem to be about 30% of the overall loan book. Do you expect this percentage to rise over the next year, or is that kind of standard because of the type
Sorry,
of...
what was the figure again? Sorry, what was
Um,
the data?
John says extensions seem to be about 30% of loans. They seem to get extended out. Obviously, that's part of the nature of development lending. Things usually never go on time. So do you expect that number? Has that been a consistent number of over the time period? Do you see that changing at all? Is that higher because of COVID?
Um, yeah, I mean, I would imagine that's probably quite about average for short-term property finance in general, whether it's bridging finance or development finance. Obviously, development finance and any number of things can knock a development off track and take extra time. Same really with bridging finance. Refinances can get pushed back for any number of reasons. So I would imagine that's probably in the right range. We would ideally have it a bit lower than that. But the key thing for us is that even where extensions are required, we're comfortable with the progress and the security on the loans that we have. So happy to say that on every loan we have in our books currently, we're very happy.
Okay, great. So anything else that you want to tell the people out there in YouTube world about Loanpad, why they should come on board? Quick plug time. Say anything you want.
Yeah, I mean, I think Loanpad is obviously a very solid investment for anyone out there, you know, from someone looking to invest, you know, a few £100 to someone looking to invest, you know, a couple £100,000. We will, you know, continuing doing what we say we're going to do. We'll continue being fully transparent so investors can check that for themselves. And really, we're not looking to reinvent the wheel. We're just looking to continue doing what we're currently doing. We have huge room for growth on both sides, on the lending side and on the investor side. So really, it's not looking to do anything too differently. We're just continuing to grow steadily. We're very keen on retail investors as opposed to institutional investors, and that's really what our business is based upon. So, you know, we recognize that our entire business is based on our reputation with our investors. And if we lose that, then, you know, it's going to be downhill from that point onwards. So we're obviously fully focused on keeping up the service that we provide, keeping up the loan quality, keeping up the liquidity, and keeping up the simplicity, really, with a few tweaks here or there.
Okay. Perfect. Well, thank you again, Louis. It's always great to see you.
I'm going to have to log back in. I'm sorry.
Oh, Google, you were just doing a terrible job. Google Meetup. Awful. I'm disappointed in the $1 billion Google. They can't get their video chat. Right. But listener, thank you for joining, giving us all this great information. Keep doing good things at Loanpad, and hopefully have you back in not too distant future, hopefully not another 2 years. Next time I'm in London, I will come see you guys, bring a camera with me, and have you do a testimony. You still owe me a video, I think. For Remembering Starbucks, you said, I'm going to record a video for you. I can't remember what the video was for.
Neither can I.
You got out of it.
If you let me know what it was, I'll happily do what I can.
I can't remember what it was now.
Yeah.
But probably...
I really appreciate you having me on here, and I really appreciate, you know, all your viewers that are watching. And yeah, hopefully until the next time.
Okay. Good on you, and we'll see you soon. Thanks again, Louis. Take care.
All the best.
Okay.
All the best. Thanks, Lawrence.
Bye.
Take care, everyone. Bye.
So there you have it. I ended the meeting. That's Louis, CEO of Loanpad. Had a really great relationship. I liked Louis the very first time I met him. I was a fan. There's just sometimes you meet people and you get a good feeling about them. I was a fan, and plonked some money into Loanpad. Again, if you're interested in doing that, go to the Financial Thing website. Go to the cashback page. There is a sign up link. You can get yourself some cashback just for signing up as a new customer. Loanpad is definitely in my top 5 peer-to-peer lending companies that have been for a while. I consider it to be one of the lower risk peer-to-peer lending companies out there. Again, not financial advice, just my opinion. So there you have it. I've been trying to get Louis on for years, and thankfully it happened. We'll do a little crypto currency update, see what's going on in the markets. We've had a pretty good run up. I think that the days of Bitcoin being in the $30,000 range are gone. I don't think we're going to see that back anymore. I think we might test the 50,000 US dollar, maybe 49,000 again, into a dip. But if you are waiting for Bitcoin to come back crashing down again right now, I don't think you're going to see it. Not to say that it won't in the future, but we've had about a 23% increase over the last week. Things are looking good. We've got talks of Bitcoin becoming legal currency in Brazil. Again, more adoption, more money from the hedge funds. We got some big companies, big banking companies now looking at cryptocurrency. Bank of America as the biggest bank in the US saying we can't ignore Bitcoin anymore. They have a research team now looking into it. The adoption is just increasing higher and higher, and I think you're going to see that price start to head towards the 100,000 US dollar range. Again, you're still in early. If you are considering it, don't be afraid. Obviously, do your own due diligence. There is risk involved, but crypto is now $2.297 trillion market cap, which Bitcoin represents about 44% of that. So, and then Ethereum 18.5%. And then the rest of the coins make up the, 60, 48, 58, 62, 63% of the entire cryptocurrency market is made up of Bitcoin and Ethereum. And there are now 12,465 different cryptocurrencies out there, which I recommend probably 12,455 of them might not be worth looking at. So be very careful what you do. Aside of that, crypto market is looking good, but especially Bitcoin is looking healthy. So I think that's it. We're going to wrap it up. Remember, tune in. If you like the video, subscribe. Please comment. Hit the thumbs up. We're going to have Narinder from Kuflink back on here next week, and he is going to be with Natalie Weeks, who she is on the credit committee. She's one of the people that looks at loans and decides what comes onto the platform and what doesn't. And we're going to talk to Narinder about what's going on with those late account filings, which has been a bit of a thorn in their side. We'll have a wrap up with them, see what's going on with their business, and that'll be live next week. So back-to-back guests. I hope you enjoyed the stream. It is really great to see everybody. Thank you so much for tuning in, and I really hope you enjoyed it. And I will see you next week. Have a wonderful weekend. Be safe. Be healthy out there. And we'll see you next Thursday. Bye. Take care.